Good afternoon and Happy New Year. Today I'd like to spend a few moments talking about 12 financial resolutions. Since it is the beginning of the year and it is resolution time, let's talk about the 12 financial things that we can do this year to make it an even better year than last year. When is the best time to tune up your financial plan? There's no time like the present. New Year's may be over, but it's never too late to review and, if necessary, revise your financial plan. Here are 12 resolutions that can help you achieve your financial goals. Remember, they only work if you follow them. Resolution number 1, get your balance sheet in order. Annually update your personal balance sheet. Achieving a successful retirement requires knowing where you are and where you're going. Your balance sheet will tell you where you are. Choosing a date that's meaningful for you, today, your birthday, 5 years from retirement, December 31st. The key is really to have a specific starting point. Assets might include equity in your home, savings, retirement accounts, property. Liabilities would include things like mortgages, loans, credit card balances, basically any debt. Anticipated income might include things like salary or Social Security, pensions, annuities, rental property. Anticipated expenses are anything your desired standard of living might cost you to maintain. Develop an idea of what you'll need to reach these important financial goals. Take some time, get the numbers right. Your starting point is important. Resolution number 2, review your budget and spending habits. Income and expenses need to match up. We all know income and expenses need to match up. If you missed your budget, what can you do to avoid this in the future? Some expenses are fixed, but many can be reduced. Consider zero-sum budgeting. Many corporations use what's called zero-based budgeting. Every expense item has to be justified again every year. For example, just because you spent X on clothing and Y on something else doesn't mean you need to spend the same amount again this year. Build from the ground up each year, but stay flexible. You can't predict healthcare costs precisely. Resolution number 3, review the titling of your accounts. Accounts are opened based on your current situation, but things change. Banks, brokerage firms, and other accounts are often based on an individual's current situation. When things change, and they will, there can be problems. Perhaps a spouse or partner dies, and the other person can't access the original account. The solution may be simple, just changing to joint ownership, for example. But there are also other things that may need to be considered. Titling affects a wide range of estate planning issues, so make sure you talk about this with an expert. Resolution number 4, designate and update your beneficiaries. When was the last time you updated your beneficiary designations? Without proper designation, your wishes may not determine what happens. Instead, it'll be up to federal or state law or the default plan document in place. Ask yourself, has something changed in your life? Divorce, remarriage, birth, death? These things require changing your beneficiary. You should update your beneficiaries on everything that affects your heirs. Examples would be wills, life insurance, annuities, IRAs, 401ks, 403bs, qualified plans, etc. Have you provided for the possibility that your primary beneficiary may die before you? Have you provided for the simultaneous death of you and your spouse or partner? If you've designated a trust, has the tax laws changed in a way that could affect your heirs? Get some expert advice from an estate planner on how to provide for different scenarios. Resolution number 5, evaluate your cash holdings. Everybody needs a safe cash reserve. Everybody needs an emergency reserve or an emergency fund. Be sure that the money's safe. Only members of banks of the Federal Deposit Insurance Company can offer FDIC insurance. Maximum FDIC insurance is $250,000 per account. However, the FDIC provides separate insurance coverage for accounts in different ownership categories. Ownership categories include single name, joint name, certain retirement accounts, revocable and irrevocable trust accounts, employee benefit plan accounts, and certain corporate and government accounts. Depending on the account titlement, you might have the ability to achieve $250,000 coverage per account on multiple accounts per family. Resolution number 6, revisit your portfolio's asset allocation. Asset allocation is a highly individual decision. Your risk tolerance can change based on your net worth, your age, income needs, financial goals, and various other considerations. Risk tolerance is always highly individual. Many individuals are more risk-averse now, given the events of the past few years. There's no one answer, but be sure you're making informed decisions. Resolution number 7, evaluate your sources of retirement income. Identify your sources of income: Social Security, pensions, employment, inheritance, rental property, retirement accounts. All are considered sources of income. Most retirees have several sources of income. Think about how secure each source is. Know which income sources are reliable and which are less certain, and how much of your total income each category represents. If too much of your retirement income is from sources you consider less stable, it may be time to reposition your assets. Resolution number 8, review your Social Security statement. Social Security is a key component of many retirement plans. The Social Security Administration no longer sends benefit statements by mail except to those 60 and over. You want to make sure you know what your benefits will be and that they've been calculated correctly. Be sure you understand the rules regarding spousal benefits. Resolution number 9, review the tax efficiency of your charitable giving. It's great to be generous, but it doesn't hurt to also be strategic with your giving. A donor-advised fund enables you to make an upfront deduction for contributions made over several years and provide other benefits as well. They are not expensive to set up, and they give you more flexibility. Give, but also do it with an eye toward reducing your tax liability. Resolution 10, check to see if your retirement plan is on track. Recession and volatile markets affected many retirement plans. Although some investors fixate on a number, retirement has a lot of moving parts. Know what types of assets you have, what your cash flow will be, what rate of investment return you're projecting, and what you think inflation will be. Your contingent plans for healthcare costs, and all the other factors that make up a realistic plan. Retirement has to be monitored and managed on an ongoing basis. Resolution number 11, make the indicated changes. Don't wait to respond or just hope things improve. Hope is not a plan. By now, you should know what your retirement income picture looks like and where the shortfalls and other challenges may be. If something significant has changed, respond promptly. Don't let it turn into something big that can derail or delay your retirement. Regardless of whether you're years away from retirement or fairly close, the effects of compounding can be significant if you take advantage of them. Resolution number 12, set up a regular review schedule with your advisor. Our team can help you with specialized tools, with impartiality, and with the experience earned by dealing with many market cycles and many different client situations. However, we need to know not only what's going on in your life today, but what's likely to happen. Are you going to move or change jobs? Do you have kids coming up on college age? Are you facing significant medical expenses? Establish a regular schedule for getting together and reviewing your portfolio, your financial plan, your retirement plan, and what's going on in your life. Your future financial health depends on what you do now. Resolutions only work if you follow them. You can tackle these resolutions one at a time or any way that makes sense for you. The key is to do them all, and like all resolutions, to stay with them. We're here to help. Let's get started today. Once again, I wish everybody a very happy new year. Here's to health, prosperity, and happiness. If you need us, give us a call. We are here to help. Thank you very much for your time.